digital exchanges and blockchain is the topic of my conversation with Chris Forrester. She is Chief Technology Officer with Shyft Network. Hi, Chris.
Hi, Robert. How's it going today?
Going well. So,
Good.
a recent report from Glassnode finds that the amount of Bitcoin being kept in crypto exchanges was at its lowest point in months. What's going on?
I think it's a combination of two things. One is during the run up to the election, I would say is probably like the primary like geopolitical event that has people sort of curious about where to hold their different currencies or whether they get into the stock market or what have you. And the second one's probably like the innovation that we've seen and the mad bull rush is up and then the bear is down in the DeFi industry within the Ethereum network. So I'm assuming that those two things sort of play out so that individuals who did want to, take a jump on the cryptocurrency train would be more incentivized to go in through the decentralized exchanges rather than the centralized ones.
So, you don't interpret it as a decline in interest in Bitcoin itself or cryptocurrencies in general. You're saying it has to do with where that's being stored. Is
Yeah,
that
exactly.
correct?
Yeah.
Yeah. So you don't see you would not say, or are we seeing a steady decline in in trust and exchanges generally? And if so, why?
Recently that probably goes into a bigger regulatory question, but as we've seen the last month and a half or whatever, I believe it was Arthur from BitMEX who got like various like legal actions put towards them on the centralized side. So I wouldn't say that there's like a decreasing level of trust, but certainly would say that the risks of a large exchange going down and one of the key holders to those particular exchanges user withdrawal can be a little bit of fear of God, I guess, is
Hmm.
into some of the participants in the ecosystem.
Do you think that we early in the early days of Bitcoin, we saw some problems with keys, lost keys, we saw hackings, we saw huge losses in exchanges. Do you think some of that has been addressed? Are we in a better situation now, or is it still a little bit of a risk, and are there still some issues to be addressed?
I would say that that's a really good question. I would say, at least from my perspective, there's been a much greater degree of things like custody that have happened in the last like 5 years, where before an issue like you might have seen with Mount Gox like
Yeah.
many years ago at this particular point is not such a big of a deal. But we just did have one in Canada actually, Quadriga, that went down the primary key holder disappeared without a trace, and various conspiracy theories on either side. And I think that those things do still impact the whether or not individuals feel safe keeping their assets on an exchange that's centrally managed versus something that they can have the keys in their own hand.
Well, what is the associated situation with regard to blockchain? I'm looking at some recent data showing that hackers have stolen $13.6 billion through 330 blockchain hack events this year to date. And specifically with crypto exchanges, 87 breaches amounting to $4.82 billion. So do we still have a big problem there?
There's definitely still a large problem in both how companies are currently dealing with their key ownership and any of the supplemental products that are built on top of those stacks after the fact.
Mhm.
So this is one thing that we're also seeing a resurgence in DeFi, where you've got the same risks, but with much less of a built-up custody infrastructure, which is leading to huge hits on how individuals are basically draining huge DeFi accounts as well these
Yeah,
days.
explain to me what you mean about the infrastructure aspect. You say, what is the trend there, and what is that leading toward? More risk or
So
less risk?
I would say that the trend is generally to be able to have insurance products, to have custody solutions that decrease the risk of one or more of the central figures at one of the developer shops or for one of the key centralized exchange like custodianship issues. And so these things have become better in the last
Mhm.
like couple years in the market. Coinbase Pro, for example, offers their own custody solution with a degree of insurance behind it. But those same lessons, because they're now entrenched, expensive lessons that people have had to learn in the newer markets, in the specifically in the DeFi space right now, you're seeing huge hacks across the blockchain, that are happening on the Ethereum layer and no longer on the centralized exchange layer.
Oh, okay. So what are the implications for blockchains that are not tied to crypto transactions? Because as you know, a blockchain is gaining an enormous amount of interest in companies in general to track and trace product and stuff like that. It has nothing to do with crypto.
Yeah.
What does this mean for that? Does that mean that these blockchains, which are claimed to be absolutely unhackable, claim to be immutable ledgers, suddenly I'm wondering, is that in fact the case?
So that's another really good pointing question. And to this particular point, no, they're not perfect. But what is happening, the trends that we are seeing happening right now are, as a great example, is companies like Nexus Mutual, who handles insurance for specific smart contracts on a blockchain. When these things are put together into something that handles a custodial and non-custodial element. So that is to say, take a big blockchain that deals with just data aggregation, doesn't really have a financial tie-in, just huge data aggregation.
Mm-hmm.
We can see that those things, because the risk of like monetary censorship is reduced from them, and then you have many less bookkeeping issues on said things happening with the data transfer happening as well as the exchanges. You can see that those things are particularly that, let's just say that the threat is much less in those particular realms. However, as soon as you connect it to, once again, a transactional blockchain, then you get those same issues happening all over again. So it helps to keep the threat levels down on the ones that are not dealing with the financial aspect of things. But when you do have a big honeypot, like a huge data aggregation site, you can run into issues like we've seen for credit ratings and stuff like that have been breached in the traditional supply chains.
Well, there are other financial transactions that can happen in a blockchain other than crypto, right? I mean, a company can run its its financial transaction with suppliers, for instance, can be recorded on a blockchain, which I imagine would make it rather vulnerable in a hackable environment. But just in general, the security of blockchain wallets today, do you think that there are issues there, or do you think that we're just overstating the problem here?
I mean, I think that it's a balancing act. So you've got your conventional how it is that you log into your online bank. That has to be pretty secure. You can access like credit lines, your past histories from however many accounts ago, and those are secured with traditional passwords and usernames. So like structurally, it's not that different. What I would say that we don't have as big of a representation of within the blockchain industry is things like password managers and such that have helped people traditionally using the Web 2.0 stacks manage their actual access a little bit better. Well, today it's mostly things known as hardware mnemonics that can help you really secure your own online wallet, as is very different from your login at a bank digitally.
Any difference in whether it's a private blockchain, a public blockchain, whether it uses a securitized coin or a token, a non-securitized token? I mean, these are all variations, different flavors, it seems, of blockchain today. Any difference there?
The main thing being that you can have like programmatic access rights for yourself. So say you wanted to change a big password in your life, your Gmail password, for example. There might be things in that service that you can say, okay, so I want to change it and I have to have a second verification, like the 2FA that you have these days. One of the biggest things that something like the blockchain can do is help build the rules of how it is that you can change passwords structured on the system itself. So for example, say you wanted to change a password, but you wanted a specific rule that once you've changed it, you're getting a notification to all of your different services, email, supplies, instant messaging, whatever. And you want it so that if nobody responds within the first 24 hours, then the password can be changed. Otherwise, there might be you and somebody else that you know and somebody else that stole your password all out there at the same time. So you can build in the rules for being able to create a structured password replacement process a little bit better in the blockchain world than the traditional.
I want to just ask you also just how you feel about cryptocurrencies that are in a fairly mature state at this point, certainly been with us for a while, especially Bitcoin. early days saw incredible seesawing of value, as you know, still going up and down to some extent, but maybe has evened out a little bit. Maybe there's more trust in crypto now. I don't know. What's your feeling about the general global acceptance of cryptocurrencies right now?
I mean, we've got PayPal that just added it in the last like what 2.5 weeks. So
Mm-hmm.
there's super huge interest from a large variety of participants, and as they're solving the issues of how it is that you can have crypto in your PayPal account, I think that things like this are only going to go create a higher native demand for these particular products because they're being seen as, let's just say, not like an innovation, an innovative technical experiment, but
Mm-hmm.
people are now seeing them as a fundamental store of value, whatever that means to you.
Yeah.
Volatility up and down doesn't really matter, but it's definitely there, something tangible that you can, go onto PayPal right now and get yourself
Yeah,
some.
but
So
that issue of value, I'm not quite sure how to handle that when they're talking about certain crypto being tied to sovereign currencies. The whole idea was that it was a replacement for sovereign currencies, and
yeah,
all of a sudden you're tying it to the dollar or whatever. I mean, doesn't that seem to be like it defeats the whole purpose of crypto to a certain extent?
but potentially it depends on how far you swing on the crypto anarchist rails. But I would say for sure that like it's because it's more accessible. You're also getting accessible to everybody with different value systems as well. So the big
Hmm.
shakedown really happens when more than 20% of a population has their hands on something, right? So well,
Yeah.
it's still the Wild West. What can I say?
Okay, well, interesting to hear, Chris Forrester, bring us up to date on the state of crypto generally and digital exchanges and blockchain. Thank you very much for being with me today. I really appreciate it.
Pleasure.